Hello everyone, welcome to Tesla Daily News. Today is July 18th, Friday, and the following is the latest Tesla news. According to market data, Tesla shares closed at $380.84, down from the previous close of $391.06, after trading between an intraday low near $377 and a high around $386 on volume above 31 million shares. Technically, the stock printed a lower close with modest downside follow-through, suggesting short-term selling pressure within a broader high-volatility range. Short-term trend weak, support tested near 377. According to the Motley Fool, some investors are asking whether this pullback in Tesla stock, with shares now below the $400 level, is a chance to buy the dip ahead of the upcoming earnings report on July 22nd. The article stresses that Tesla still trades at a valuation that assumes Elon Musk delivers on a bold long-term vision: robotaxis, the Dojo supercomputer, the Optimus humanoid robot, and a growing energy business. The key argument is that Tesla remains very much a founder-led company. Musk has increased his voting control and continues to reinvest capital aggressively rather than prioritizing near-term profits, which appeals to believers but increases risk for more cautious investors. The piece points out that, in the most recent quarter, Tesla actually beat expectations on deliveries, yet the stock sold off as the market focused on shrinking margins, softening demand in North America, and heavy spending on new technologies. For stockholders, the author suggests separating two ideas. First, whether you have conviction in Musk's decade-long vision despite volatility, and second, whether it makes sense to gamble on buying just before an earnings release that could send the stock sharply in either direction. The conclusion is that Tesla can still be attractive to long-term believers in its autonomous and AI future, but that timing an entry solely around the July earnings date is closer to speculation than disciplined investing. According to Reuters and Lenta, the U.S. National Highway Traffic Safety Administration has rejected Tesla's petition to avoid a recall over headlight brightness issues, forcing the company to proceed with repairs on almost 20,000 vehicles. The recall covers roughly 19,900 Model 3 and Model Y vehicles from model years 2017 through 2023, whose headlights may exceed maximum permitted lighting levels. Tesla argued that the non-compliance was inconsequential to motor vehicle safety and said it had received no complaints, crashes, or injuries related to the issue. NHTSA disagreed and stated that, especially under adverse weather conditions such as rain, snow, or fog, the overly bright lamps could cause veiling glare both for the Tesla driver and for surrounding traffic, increasing crash risk. The agency also cited broader public concern about headlight glare, referencing survey data from the American Automobile Association showing that many drivers feel nighttime glare has worsened in the past decade. For investors, this decision underscores ongoing regulatory scrutiny of Tesla's hardware and software, and it serves as a reminder that safety regulators are willing to overrule automaker claims about inconsequential defects, potentially adding cost and reputational risk. According to the Star in Malaysia, a federal investigation into a high-profile Tesla crash in Katy, Texas, suggests that the company's full self-driving software was not the primary cause of the tragic incident that killed a 76-year-old woman inside her home. The National Transportation Safety Board reported that data showed the driver had fully depressed the accelerator pedal, overriding the self-driving feature and propelling the Model 3 to highway speeds on a residential street before it left the road and crashed through a brick wall. The driver had initially told police that the self-driving software was engaged, but the NTSB findings indicate that the driver's own inputs were decisive. This case is significant because it arrives just as Elon Musk is attempting to reassure regulators and the public about the safety of Tesla's driver assist technology while promising a transition to fully autonomous cybercabs without steering wheels or pedals. At the same time, the National Highway Traffic Safety Administration has elevated a separate investigation into Tesla's self-driving system to a full engineering analysis, examining millions of vehicles and dozens of incidents where Tesla's allegedly violated traffic laws or failed to prompt drivers to retake control in poor visibility. For shareholders and enthusiasts, the Texas crash investigation provides a partial positive in that it shifts blame away from the software in this case, but it also highlights how intensely every Tesla crash involving automation is scrutinized. The long-term valuation of Tesla depends heavily on the success and regulatory acceptance of full self-driving, now marketed as full self-driving supervised. That means each investigation, even when it clears the software, can influence public perception and the pace of adoption. According to Cursor Info, Tesla has dismantled the assembly line for its long-running premium models, the Model S and Model X, at the Fremont factory in California, freeing up space to focus on new priorities such as the Optimus humanoid robot. After around 14 years of producing the flagship vehicles that helped establish Tesla's brand and prove the viability of long-range electric cars, demand has shifted toward the more affordable and higher-volume Model 3 and Model Y. In response, Tesla removed the legacy line in just over 6 weeks, signaling a strategic pivot rather than a plant closure. The vacated area at Fremont will be repurposed for series production of the Optimus robot, which Elon Musk has repeatedly described as one of Tesla's most important future products. Musk envisions Optimus transforming manufacturing, labor markets, and everyday life, reinforcing his claim that Tesla is not merely an automaker but a broad technology and AI company. While the company is not abandoning vehicles, current models including Model 3, Model Y, Cybertruck, and Semi remain in production, and future products like Cybercab, the new Roadster, and a Robovan are in development. The shift of prime factory real estate toward robotics underscores where Tesla's leadership sees the biggest long-term upside. For investors, this move suggests that capital and engineering talent will increasingly flow into robotics and AI platforms with potentially massive margins, but also with substantial execution risk. It also raises questions about how Tesla will balance its identity as a carmaker versus its ambitions in robotics and automation, a key factor in how the market values the stock. According to Industry Magazine in Austria, Tesla's Gigafactory in Grünheide, Germany, continues to expand and refine its highly integrated manufacturing approach around the Model Y, currently produced in an updated Juniper version. The plant is largely focused on this single core model, which simplifies production by reducing the variety of configurations, material flows, and retooling events. That simplification supports faster learning curves and efficiency gains, which are central to Tesla's cost reduction strategy in Europe. A prominent element of this approach is gigacasting, replacing many smaller stamped and welded body parts with just a few large aluminum castings. This reduces the number of weld points, handoffs, and individual process steps, reshaping material flows and lowering labor requirements per vehicle. The article notes that while Tesla has shown a willingness to scale back the most extreme casting concepts, rolling back an even more radical gigacasting idea in 2024 in favor of a more controllable solution, it has still pushed the industry's boundaries. Other innovations associated with Tesla, such as structural battery packs, over-the-air software updates, a proprietary charging network, and direct sales, were once Tesla-only but are now reference points for the broader auto industry. For Tesla shareholders, Grünheide illustrates both risk and opportunity. On one hand, this concentrated bet on a single high-volume model in Europe could deliver strong scale economies and support margins in a competitive market. On the other, it exposes Tesla to regional demand swings and regulatory uncertainty in the EU. The factory's evolution will be a key test of whether Tesla can sustain its manufacturing edge over traditional automakers who are starting to adopt similar techniques. According to the Irish Independent, Tesla has opened its first V-Slough supercharging station in the northwest of Ireland, at Drumcliff North on the Anjou in County Sligo, adding 8 new stalls capable of charging at up to 250 kilowatts. The site is part of Tesla's broader push to strengthen charging coverage from major urban centers into more rural regions, improving the practicality of EV ownership across the country. V4 superchargers are designed for simplicity and speed. Drivers typically just plug in and let the car and Tesla app handle authentication and billing. Tesla owners can usually add significant range in 15 to 30 minutes, aligning charging stops with short breaks. Ireland's first supercharger opened in 2017, and the network has now grown to about 68 stalls nationwide, with plans to nearly double that figure by year-end through new locations in Longford, Limerick, Wicklow, Mallow, and other key areas. The article notes that Tesla has delivered more than 10,000 vehicles in Ireland, won a Most Recommended Car Brand Award, and launched the Tesla Powerwall in 2025 to support home and business energy storage. For both investors and enthusiasts, this steady build-out of infrastructure and energy products helps lock in customers and underpins Tesla's strategy to be not just a car seller, but a vertically integrated energy and mobility ecosystem provider. According to Delphi in Latvia, Tesla has officially entered the Latvian market and will open its first physical presence in the country, a pop-up store in the Spice Shopping Center in Riga, on August 21st. Ahead of the opening, Tesla will launch an online configurator tailored for Latvian customers, allowing them to configure and order vehicles directly. At the Spice pop-up location, visitors will be able to explore Tesla's model lineup and speak with product specialists about vehicle purchase options, charging solutions, and practical aspects of EV ownership. This marks Tesla's first store in Latvia and completes physical coverage across all 3 Baltic states, after previous expansions into Lithuania in 2024 and Estonia earlier this year. Although Tesla is only now officially entering Latvia, its vehicles have already been popular on both the new and used EV markets in the country. For investors, this development is another example of Tesla's measured geographic expansion strategy, deepening penetration in Europe by filling in regional gaps and providing on-the-ground sales and service presence, which can support delivery growth and brand strength in emerging EV markets. According to the Stars AP report, Tesla's broader brand and sales performance remain under pressure from lingering boycotts linked to Elon Musk's political positions, even as the stock has been climbing on expectations of future technological breakthroughs. Musk has argued that traditional sales metrics will matter less as the company transitions toward providing software, autonomy, and robotics capabilities on top of its existing vehicle base. This narrative aligns with Tesla's heavy investment in full self-driving supervised, the planned Cybercab service, and the Optimus robot. However, it also means that any delays in regulatory approval for self-driving, or setbacks in robot deployment, could have an outsized effect on market sentiment. For shareholders, the tension between current fundamentals such as pricing pressure and competition in EVs and promised future AI-driven revenue streams remains a central theme for the stock. According to Haber in Turkey, a troubling incident involving Tesla's Pet Safe or Pet Mode has raised additional questions about software behavior and real-world safety. In this case, an elderly woman was left in a Tesla while her grandchild attended to business in a nearby building. The vehicle was reportedly in a mode intended to keep pets safe by maintaining climate control and keeping doors locked from the outside, but the air conditioning was not functioning correctly. The woman became trapped inside for more than an hour as interior temperatures reached around 100 degrees Fahrenheit. Local deputies responded after witnesses called emergency services and, using an online translation tool because the woman spoke only Spanish, were able to locate the grandchild and free her. The incident has been reported to Adult Protective Services. While this appears to be a misuse or malfunction of a specific feature rather than a systemic defect, it highlights an important issue for Tesla and its investors. As vehicles become more software-defined and feature-rich, edge case failures or misunderstandings can quickly become reputational risks. According to Cinco Días in Spain, Tesla has quietly launched its first branded bicycle product, but not in the way many fans expected. Instead of a high-tech electric bike for adults long rumored as a potential Model B, Tesla introduced the Tesla Balance Bike for Kids, a minimalist balance bike aimed at children roughly between 2 and 5 years old. Priced at about $225 on Tesla's U.S. online store, the bike does not include a motor, battery, pedals, or drivetrain. It is a traditional balance bike with a magnesium alloy frame for low weight, an adjustable saddle with several height positions, and Tesla branding on the frame and front. Compared with mainstream children's balance bikes, Tesla's offering sits at a premium price point, above many mass-market options but in line with some higher-end specialized brands. The launch shows Tesla expanding its lifestyle and merchandise ecosystem, using its brand power to reach households and children in new ways. For investors and enthusiasts, the product itself is not financially material, but it is another example of Tesla monetizing its brand and testing adjacent markets, while the auto industry and some competitors, such as BMW, Yamaha, and Rivian's dedicated electric bike effort, move more directly into adult e-bike platforms. According to multiple sources across Europe and North America, these developments together paint a picture of Tesla at a strategic crossroads, balancing ongoing regulatory scrutiny and safety obligations, expanding its EV and charging footprint into new territories, and simultaneously pivoting resources toward AI, autonomy, and robotics platforms that could define its next phase of growth. For stock investors, the coming quarters will be crucial in determining whether Tesla can execute on these ambitious plans quickly enough to justify its valuation amid rising competition and macro uncertainty. Thank you for listening to Tesla Daily News. If you enjoyed this episode, please subscribe and stay tuned for our next update.